Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Brian Burke. Thanks for being on the show again, Brian.
Thanks for having me on again, Whitney.
Now, I'm always honored to have Brian on. Someone's got over 3,000 doors and I don't know, had over like 700 properties or 700 acquisitions or something like that.
Yeah, I think we're up to like 750 now.
750. So he's crushing it. He's got numerous properties under contract now, many hundreds of doors, and very experienced and grateful for his time and being on the show. But a hot topic right now in the market, and I hear it all the time. I get phone calls all the time asking me about how I got started. I know Brian gets the same thing. He's been in this business for 20 or 30 years in real estate. And is this topic of raising capital, how we get started doing this, and what that should look like, and investor relations, how do we care for investors? And I just thought Brian's going to be a perfect person to talk to and tell us how he has mastered this and to where he's at today. And but Brian, why don't we back up a little bit and maybe give us, how you got started raising capital, how you started building those relationships with investors, and then let's grow into, where you're at today.
Gosh, my first raising capital experience is kind of a funny story. We were talking, before we started this podcast that I was in a law enforcement career, and I was doing real estate on the side while I was doing my law enforcement job, by night, and real estate by day is kind of how I was doing it. And I was buying, fixing up, and reselling houses, and I was finally the point where my real estate business, or the job, was getting in the way of my real estate business. I'm like, I got to get out of this, this job, and just start, just focus 100% on the real estate side. So I put in my notice at the department, and then I went over to City Hall, and I reserved a room at the community center. And so I go back to the station. I tell all the guys that I worked with, I said, guys, I just put in my 2 weeks notice, but I'm doing this real estate thing, as you all know, and I just reserved the room at the community center. Everybody come down. I'm going to tell you what I'm doing in real estate. So everybody comes down to the room, fills that room up. I mean, it was packed with people. And I gave this little show, a little dog and pony show about what I was doing with real estate and, houses and all that kind of stuff. And I said, look, if any of you guys will invest with me, I'll split the profits with you. And so I said, I'm going to raise $500,000. I'll take investments as small as $5,000. And, and I'll split, the 50-50. To the group. And, after it was like a 2-hour meeting, I walked out of that room. I had 28 investors that amongst them invested $500,000, but now I had 28 investors all packing heat. Every one of them's got guns. They all know how to use it. They all know how to off me if they want to and get away with it. So I'm like, crap, now not only do I have to perform, but if I lose any of these guys' money, I'm a dead man. That was my first experience raising capital. How's that? You're going to have
a lot of trouble if you mess up.
That's some pressure, man.
Wow. And, I was thinking about that. I mean, you obviously had a plan. I mean, you were already in the business. You're already doing some deals. You had a game plan. But, one thing it seems though, like you already had a previous relationship with all these guys, right? They already knew you. They already trusted you. You'd been, with law enforcement for numerous years working with these guys. It just seems like that was a big help there, right? I mean, they knew you and trusted you.
That's exactly right. And that's the only reason that it happened. And, I say that, when it comes to raising money from investors and, I've been working with investor money now for, I guess, about 22 years, and I've raised over $100 million. So I've come to learn a few things in the course of having done all of that. And one of the things that I've learned is there's 3 trust curves that you have to get each investor to climb each of those 3 trust curves. The first trust curve you have to get them to climb is they have to trust you. And this is kind of a common mistake with people who are out trying to raise money, is they want to say like, hey, everybody, I've got this deal, right? And they want to focus on the deal, but nobody cares about the deal. what matters is whether or not they trust you. Now, here I am, I've worked with these guys. I was there 14 years, right? I mean, I was there for a long time. And not only that, it was a law enforcement job where they know I've passed a psych test, a background, and, polygraph, and, every other kind of examination into my character. So, between those two things, that trust curve was already met when everybody walked in that room. We can get onto the other two trust curves in a minute, but what you're saying is exactly 100% true. They trusted me, and that's the only reason that I had those investors.
I was thinking about like relating that to how we're trying to raise capital now. I mean, you spent time with them, like many, many hours, obviously we're not going to do that with every investor now, but it does take time, right? It takes many interactions and nurturing.
It does. It takes time. It takes the, you have to have an ability to put your character on display. And, one of the ways that's been really helpful for me is my former career in law enforcement, because, people trust, most people trust police, right? And knowing what you have to go through to even get into that business, people understand that it's a high level of trust. I mean, your trust to, they give you a car and a gun and tell you to go drive around lights and sirens around the city. Everybody has to trust you in order to do those things. And so trusting you with some dollars is a little bit easier, when they see that background. Now, of course, not everybody that's going to raise money is going to have that advantage. So whatever advantage it is that you have, you've got to play to that advantage for your circumstance. Mine was just different. And that was mine.
That's interesting. You have to play to your advantage. And I've heard, different people talk about like, are you at high level in corporate America? Well, you obviously have lots of relationships there that you can start letting people know you're in real estate and what you're doing, right? Just to start piquing their curiosity. But hopefully it's people that trust you because of all this time you spent with them.
Yeah. And, raising capital always starts with your inner circle. It's like people always go like, oh, where can I go to meet investors? Should I go to the Rotary Club or, whatever, where do I go to meet investors? And you don't go anywhere to meet investors. What you do when you have you want to fund a deal is you have to go to people you already know. You're not going to meet someone for the first time and automatically get them over, the 3 trust curves that we're going to talk about on the show and have them sign a subscription agreement. It's going to take a bit of time. And so starting with your inner circle, which means friends and family, let's say you're going to start up a company, you invented some software product or whatever, and you're going to start up a company. Where does the seed money for most small companies like that come from? It's friends and family every time. You don't just go to an angel investor group or a VC firm, and get money. That first round of funding is always like friends and family and borrowed money and credit lines and your home equity and, wherever you can come up with any resources to do the deal with what you already have.
Nice. So yeah, the first round, anywhere you can come up with it personally, right?
That's it.
Yeah. Awesome. Okay. So they have to trust you. And one thing I wanted to reiterate also, you said, they try to focus on the deal before they've built the trust. And I see that often as well. And, I've made those mistakes, myself, but, really being focused on this deal, bringing up the deal too fast, before maybe even the second time you've talked to this person,
Well, this gets into the second and the third trust curve. So we talked about the first one is they have to trust you. The second trust curve is that they have to trust real estate as an investment class. So, they're probably used to investing in stocks and bonds and, mutual funds or whatever. And real estate is totally unknown or different to them. So the next hurdle is, after they trust you, they have to trust that real estate is an appropriate investment for them. And then the third trust curve, and we'll talk a little bit more about that, I'm sure, as we go on. But the third trust curve is they have to trust this specific deal. So you'll notice that that's the last trust curve. So what you cannot do is you can't go to somebody you've never met that doesn't invest in real estate and say, look at this deal I'm getting. You want to invest in it. It's going to fall flat 10 times out of 10. It's going to go nowhere. So people always ask, this is one of the most common questions I get is what comes first, the deal or the money? And most people think you get a deal and the money will come, or if the deal's good enough, you'll find the money. How many times have you ever heard that, right?
Lots.
All the time. And so, my counter argument to that is always this. I say, let's say, for example, you decided you were going to go do some shopping, and you go down to the department store and you start throwing a bunch of stuff in your shopping cart, and you go up to the cash register, and you're next in line. Now the clerk says, "Can I help you?" And you say, "Yeah, I have all this stuff here I want to buy. Can you hang on to it for me for a while I go out and try to figure out where the money is to go pay for all this?" And then you leave the store. You just completely wasted your time. If I'm going to go to the store, I want to know what is the credit limit on my credit card. And I'm going to make sure that all the stuff I throw in that shopping cart is going to be within the limit of my credit limit on my credit card. So to say that I'm going to go out and go find a 100-unit property that costs $10 million and I don't have no money of my own, and I'm going to go out and go find the money with this great deal I got, you're fooling yourself.
I like that analogy. No, I agree. It's always just like yourself, those relationships that you had long before you needed the equity or needed those investors, you had the relationships.
You did. And since the deal itself is the last of the 3 trust curves, you've got to get over 1 and 2 before you go to number 3. You don't start at number 3. These have to be done in order. So, the first mistake people make is they want to go to people they don't know and ask them for investments. That's mistake number 1. The second mistake people make is they say, all right, let's say I'm going to go to people I know, and I'm going to have to educate them and convince them on why real estate is right for them. Well, that's fine, but just recognize that that's one of the hardest jobs there is out there. And if you think that, you're just tired of your 9 to 5 and you want to quit your job and invest in real estate because your job's too hard, just wait till you get to your new job of investing in real estate and find out how hard your job is when you're trying to convince people that know nothing about real estate that real estate is a good investment for them.
Wow. So I guess give us a little guidance there and how to do that properly, or maybe what's worked best for you. How have you educated people, or how did you spent that 2 hours in that room with those officers? What was that talk like compared to maybe, what you're doing now to educate investors?
Yeah. Back then, of course, I didn't know a lot of people. The only people I knew were the people I worked with. Cops aren't really all that well known for socializing a lot. So, it's like you kind of, your core group of folks, and that's who I went to and to get my first round of funding. But eventually, I had to expand that quite a bit. So, now I got a bunch of people I already know, and I got to convince them real estate is good. So, what I did is I showed them, stuff about, what the median home price had done. Because again, we were doing single family at the time. We weren't in multifamily yet by that stage. Where home prices were going, showed them before and after pictures of some of the houses I did, show them how much money you made on some of these houses and how long it took, all that kind of stuff. And that kind of got to people's emotions where they thought, wow, this looks really interesting. I want a piece of that. And that's how I got over that. There's some guys in the multifamily space, I'm sure you've had them on your show, that are really good at sitting across from people and showing them charts and graphs and stats and figures and all that kind of stuff to convince them why real estate is good. And they'll do things like they'll go to self-directed IRA custodians, for example, and they'll do a webinar or an in-person presentation, on real estate and teach people about real estate. And by and large, it's a hard gig. I mean, it's a lot of education. What I've learned works the best for me is to stop doing all of that. And instead of educating people on why real estate is good, I get much more success by just educating people on why the deal is good. And those people already believe in real estate. So now I've gotten to the stage in my career now where I've positioned myself where people who are interested in investing in real estate, especially passively through a passive investment, reach out to me because they either heard about me or know what we're doing and recognize, okay, this guy's a real estate expert. I want to invest with them. I'm already convinced I want to invest in real estate. I'm already convinced that I trust this person because they're the right one for the job. I already trust, that real estate is a good investment for me. All I have left is that third and final trust curve of getting them to like the deal. Now, not to say that doesn't mean that we don't have to put out plenty of stuff and be on podcasts and speak at conferences and do presentations at corporations and that sort of stuff to have our presence known, build that trust, and kind of spread that real estate knowledge. But that's the last step is that deal step, and that's really what we're focused the most on.
So what you're saying is this has kind of evolved a little bit now, I guess, for yourself, because now when people are coming to you, they are already interested in real estate, and so now they already trust you as well because of your track record, I'm sure, for the most part. So you're going to get to know them a little bit, but they're already interested in real estate. They probably maybe have already invested in real estate in some way, and now it's like you said, you can almost really quickly get to this third step.
Yeah, that's exactly what it is. So now it truly is find the deal and the money will come. So now what I can do is when we find a property that we want to acquire, let's say we got to raise $10 million. I don't have to go, well, let me go see if I can find the $10 million before I put an offer on this deal. We just put in the offer, we buy the deal, or get the deal under contract. Then we go out and raise the money. All we're doing is the third step. We're only convincing our list of folks that we already know wants to invest with us, and we already know wants to invest in real estate. We're just going to show them the merits of this deal. And of course, if it fits for their goals, they'll invest. If it's not a fit for them, they don't invest, and that's fine. Everybody has different goals. But we're really focused on that one last step. The mistake that a lot of people make is when you're new in this business, what they're trying to do is short circuit number 1 and number 2 and go straight to number 3 because that's what they see us doing. But it doesn't work because number 1 and number 2 take a lot of time pre-deal to build up enough of an audience that trust you and want to invest in real estate before you can go straight to step 3. So you have to focus your efforts on step 1 and 2 until you get to the level where we got, and now our track record speaks for itself. Our background is very obvious to people, and that gets us past number 1. And people they listen to your show or somebody else's show, or they're on Bigger Pockets or whatever, and they already know they like real estate. And all I have to do is that one last step.
Nice. Okay. So let's move into that, have them trust the specific deal. How do you do that? How do you present that to them, or what does that process look like?
The process is giving them all the information. You want to give the investor everything. You want them to know everything about that deal that you know about that deal. And so for us, that means, we're going to show them our entire financial underwriting. We're going to show them a side-by-side comparison of the property's trailing income performance next to our projected income performance. We're going to explain why we're projecting what we're projecting. We're going to show them rent comps to validate the post-renovated, market rents that we're going to be asking on the units. We're syndicating multifamily apartments is what we do. So we're going to show them the rents that we're projecting to achieve on those units. We're going to show them the financing structure and the cash flow statement and a waterfall of how the money is divided, along with a sensitivity analysis that's going to give them somewhere between 200 and 300 different combinations of scenarios of income above target or below target, cap rates above target and below target, occupancy above target and below target. And what does that do to the return so that people can kind of see the landscape of, what does it take to make this deal go bad and how good could it get? And they can see all of those things. And we share our whole due diligence package with them as they can see the rent rolls and financial statements and contracts and all of that stuff. Complete transparency and visibility so they can get comfortable that this deal meets their goals and objectives. So all we're doing is delivering information.
Nice. So I know you want that information to be delivered as professional as possible and laid out in a way they can understand it. So how do you do? Is that are you reaching out through email first, or are you phone calling first? Or, what does that process look like? Is it an email then a phone call, or do you include a video? How do you do that?
Yeah, we've done a variety of different things. And it also depends on the deal a little bit and the response to the deal. So generally speaking, our entire flow basically looks like this. Somehow, some way, someone will find out about us. whether they see me on a podcast, they saw me on Bigger Pockets at a conference, speaking at a conference, just heard about us, internet search, whatever. They come to us and find us and get into our ecosystem. From that point, my investor relations vice president will have a phone call with every new prospect and get to know them, and we'll start building that relationship with them. We want to learn about their goals and objectives. Right now, it's all about them. It's all about the investor and learning about the investor. So that's kind of step one. Once we've gotten through all of that and they're in our database, we've had a conversation or a series of conversations with them. We've learned about them. Next thing that happens is when we have an offering, they'll receive an email that will say,
I want to back up just a little bit. What are you like, you're talking to that investor, what is it you want to know about them? What are you asking them? What are some like main things that you definitely want to ask them?
Well, we want to ask them what their investment goals are, what their objectives are. We want to know, how old they are, if they're married and have kids. We want, what's their investment experience? What's their experience specifically in real estate? Have they invested in other passive syndications before? And some of these questions may seem kind of odd, but what we're really looking for is, if you're 90, the investments that are, appropriate for you might be different than if you're 35. And so, we want to try to get a feel for, where in life is this investor so that we can show them investments that are going to be the best fit for them. And we want to know about their risk tolerance, so you don't want to show, a deep value add deal that's going to have no cash flow in the first year to a retired person that is depending upon their cash flow from their investments for their living expenses. It's just what we're trying to learn is, what are their needs? Are they growth oriented or cash flow oriented? All of that kind of stuff, because we have a variety of different investments and we want to make sure they get the right fit.
Nice. Okay. So now you got a deal.
Now we got a deal. We send out the email saying, we have an offering. If you're interested in, here's a brief synopsis of the offering, which is usually just a paragraph. And generally we'll have a button they can click on that will send them into a personalized data room, where inside the data room they can see pictures of the property. They can see documents related to it, such as a slide deck that has all of that information I just outlined to you, along with some more stuff, background pictures, the whole thing, everything. Private placement memorandums, subscription agreements, all that stuff is in there so they can see, all of the different materials for the offering and make an investment decision. So it starts with the email. They look at the stuff, they decide, whether or not they want to invest. If they do want to invest, when everything's ready, they can subscribe right online through our portal, through our website, and invest in it. It's pretty simple.
Nice. Okay. So right away, you're putting this simple email out, short paragraph, just about the deal. If they're interested, you have a button, and then they can go into the data room, and then you're going to have everything there for them to see. Whatever you want to see, all the information's here, right? And so then I would imagine there's going to be numerous that are going to have questions. I'm sure. I know. Like me, there's numerous that will, or I can relate, that will just say, "Yeah, I want to invest," and then you're thinking, "Well, did you actually read the documents?" But then again, I know there's many who have lots of valid questions, and so how they're calling in. How are you funneling those calls, and what does that look like?
Yeah, so we've been doing this for a long time, and through the course of that, we've learned a lot of investor questions. So what we try to do is to answer as many of those anticipated questions as possible in the offering package. Sometimes, of course, that gets completely missed or didn't get read or whatever the case may be, or they just have additional questions. So what we try to do first is try to answer as many questions up front as we can through the materials. Let them speak for themselves. The next thing we'll do is we'll put together a frequently asked questions list. And sometimes the fact list is based upon questions we've received from other deals, or other times it might be, hey, we've got 5 calls on this one and everybody wants to know this. So we'll put that in the frequently asked questions list, and that list goes into the portal so they can see that as well. And then we always encourage people to reach out to us with questions. And so a lot of times they'll send an email to Bob, our Senior VP of Investor Relations. He'll get the email and he'll answer the question. Or if he doesn't have the answer, he'll come to me and say, hey, somebody's asking about the exit cap rate projection and how we arrived at that. Can you get me an answer? And I'll write out an answer in the email that he will send to the person asking the question. Sometimes we'll get a 10 question list, where we're answering a lot of questions, or maybe it's one or two. And sometimes we'll get ones where, we'll just say, let's just get this guy on the phone and we'll answer all of his questions, because some of our answers are going to lead to more questions and we can hit it all at once. So, oftentimes we'll have a phone call with investors and spend a half an hour, even an hour on the phone with them, sometimes just going through all of their questions that they may have. Generally, newer investors that haven't invested in a lot of offerings will have more questions than one that have invested in lots of offerings, but it's all across the board.
Okay. So I like the frequently asked questions list too. And you're like answering these frequently asked questions, you're putting that in your data room. So that's saving you a lot of time.
It does. Yeah, it does. You'd be surprised how much that really helps. Another thing that we do that really helps a lot is we'll put together a side exhibit called Understanding the Financials. And in that exhibit, what we'll do is we'll show them, the financial exhibits on a multifamily property get very complex. And how does the rent roll relate to the operating statement? How does the operating statement relate to the cash flow statement? How does the cash flow statement relate to the waterfall? And how does all that relate to what I get? So we create this whole almost like a flow chart to show people, how to connect the dots so that they understand what all those complicated financial exhibits look like, because a confused mind says no. And we want people to be able to understand these complicated financials. And sometimes they're afraid to ask, so they just say no. So we've found that that's a really useful tool.
I like that quote. A confused mind says no. I like that. And it sounds like, I haven't heard anyone lay it out in this detail. I love the side exhibit you're talking about, understanding the financials, and because they're complicated, and if you're not used to underwriting multifamily, especially large deals like you're doing, that's going to look like a jumbled up mess.
It does. Yeah. Yeah. People get glazed over really quickly. It's like, they see the pictures and it's exciting, and they see what you're going to do and it's exciting. And then they get to the financial page and it's like, that's it. It's just stone-faced, and they get bored to death. Now, we have some that, they love this stuff. They're breaking out a calculator and they're trying to follow the calculations in the spreadsheet. And then, we'll get calls like, hey, in this investor waterfall, how did you arrive at this number? Because I've tried adding it up every single way and I can't get this to equal this. Then you explain, okay, well, this is exactly how this works. So we've had it where, sometimes, we have to dig into the formula in our templates to lay out exactly how that number is arrived at for them, because some people want to know to that level of detail. Now, others don't care. They don't even want to see the numbers. It's like it causes them to go blank. So we just want to educate as much as possible.
Wow. No, it's been great. It's been really good. And unfortunately, we're about out of time. I was hoping to really get into the investor relations, even after a deal and things like that. But maybe we'll have to do another show on that.
We sure could.
So Brian, anything else you want to leave us with as far as just, getting that investor to the deal? Maybe somebody that hasn't invested, maybe they've been on our list. We've had numerous conversations, and maybe they've been on our list for a long time, but they just, they haven't committed or haven't invested with us yet.
It's funny. I had this happen the other day. I had a conversation with a guy, somebody I see around on biggerpockets.com a lot, and he's on our investor list, and he's never invested with us. And he called me for some other reason because he wanted some advice on something. And, during the call, I said, I have a question for you. I said, you're on our investor list, but you've never invested with us. Why is that? What is it that we're missing that you're looking for? And he gave me the answer, and it really, totally 100% made sense that, he had some specific things that, he was looking for. And, the deals that we had presented thus far were different, and they weren't that. And it was really educational. And it just shows you every investor has different goals and different objectives and different things that they're concerned most about. And if someone hasn't invested with you and they're on your list, there's probably a reason. It's either that what you're putting out isn't just a fit for exactly what they're looking for at that moment, but might be in the future, or it might be that they're still in the middle of getting that in that trust curve with you, where they want to watch what you do for a couple of years, sometimes, yes, believe it or not, before they make that move. So I would say when you see that, don't give up on them. Keep them on your list. Stay in communication with them. And it's a matter of time before they either trust you or find from you what it is they're looking for.
I like that you just asked him. I mean, you just came out and said, what is it that we are missing that you're looking for? And that he was honest as well. And it made you better, didn't it? Like, it helped you. I'm sure you learned something from that.
Absolutely. And he said, hey, that's a fair question. And it was a great conversation. And I just thought it was really, really interesting. It's a question I'm always curious about. Hey, you're on my list. You get my emails. You're opening them. Why aren't you investing? What are we not doing that you're looking for? And it was a great conversation.
Wow. Brian, another amazing show. I really appreciate your insight, and just your experience is great. And you're able to teach all of us so many things from your experience. So, but I don't think I asked you last time how you like to give back.
How I like to give back. So myself and a couple other guys from biggerpockets.com created a charity called A Hero's Home. And you can find it at aheroshome.org. And the purpose of this charity is we're going to give away a completely renovated home, free and clear, to a deserving U.S. service member, first responder, or veteran. And we couldn't be more excited about it. And we have a $125,000 funding goal. We're about halfway to our goal. A lot of that money has been contributed by the founders of this charity, myself and some other guys from biggerpockets.com. And that to me is going to be a very fulfilling way to give back. It's very close to my heart, especially with a past in being a first responder. I really look forward to the day we get to give someone that home.
Wow, that's incredible. Thanks for sharing that. Thanks for doing that. Be passionate to help those guys. I can relate as well, being law enforcement in the past. But Brian, again, thank you so much, and tell the listeners how they can learn more about you.
To learn more, go to praxcap.com. It's praxcap.com. You can also find me hanging around in the biggerpockets.com forums.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.